Well, before AI, the big buzz in tech was the Metaverse back in 2021. Former Amazon executive Matt Ball launched a Metaverse ETF. It was the same year Facebook changed its name to Meta. Top holdings include NVIDIA, Microsoft, and, well, Meta. Names that have been riding the AI wave in a very big way. Now the fund is making a big bet on crypto. Joining us now to explain is Matthew Ball, CEO of Epyllion and founder of Ball Metaverse Research Partners. Matt, it's great to have you on the show, and that's exactly where I want to start with you. Why is this the moment when it makes sense to invest in Bitcoin and ETF for your fund? I mean, we have Bitcoin spot ETFs trading now. There's an expectation that Ethereum spot ETFs could start trading as soon, or get the green light to start trading as soon as next week. Is that what this timing hinges on, or is it something else?
No, it's a much broader basket than that. We established this index about 3 years ago, or 13 quarters ago. At the time, it was establishing a passive index methodology. We've been rebalancing it every quarter since, based on an accumulated number of factors, including increased regulatory clarity, not just on spot ETFs, also NFTs, the increased adoption of stablecoins, and more broadly, regulations in particular in Europe, which are now for the first time allowing developers to produce and release crypto-based experiences, apps, and games through app stores and major gaming consoles. Those collectively drove the inclusion.
Interesting. I mean, there's a lot of talk out there, particularly in the trader community, about the role that Bitcoin, for example, plays in terms of indicating broader liquidity in the market, in terms of the momentum trade and which direction that's trending in as well. But it sounds like you're looking at this from how do you take the technologies behind something like Ether, blockchain, for example, and how does that apply out to the metaverse? Is that the way to think of it?
That's quite right. These two topics, crypto and the metaverse, or whichever term you prefer for this overall shift to 3D immersive spatial experiences, have long been associated with one another. You'll find that many of the pioneers, be it at Coinbase or Binance thereon, have talked about the criticality of this information system for building a persistent experience. Neil Stephenson, who in fact coined the term, now has his own Layer 1 blockchain startup, co-created with one of the creators of Magic Leap and one of the chairmen of the Bitcoin Foundation. Their belief is that these systems are essential, not identical, but intertwined when it comes to building a next version of the internet.
Matt, pardon my frankness here, but is this even a metaverse ETF anymore? I mean, if it were, arguably, it should be in the toilet. But because it looks more like an AI ETF, it's doing pretty well. Now you're buying crypto, which seems to have divorced entirely from the metaverse narrative. It's doing its own thing. If they were connected, crypto would be in the toilet too. So is this a metaverse ETF anymore?
Well, I wouldn't agree with the argument that the metaverse is in the toilet. I would tell you that the term itself is. Roblox, on its IPO day, declared themselves a metaverse company, the first company in 15 years to use the term in an SEC filing 16 times in their initial public offering document alone. Today, Roblox has more than 350 million monthly active users. That's more than the entire ecosystems of PlayStation, of Xbox, and of the Nintendo Switch combined. Most of these platforms now, in aggregate, are approaching 1 billion monthly users. Again, the term has changed, but the underlying trends remain as durable as possible. You're certainly right to say that many of these companies are focused on other themes, but you can take it from Mark Zuckerberg himself, who has said he can no longer explain more clearly the company's continued interest in the metaverse and indeed the ways in which AI is accelerating the vision.
Well, as much as I'd love to argue with you about the metaverse, I'm going to try not to, because anytime you're using Roblox as the example, and like Zuckerberg's talking about AI, everybody's talking about AI instead. But back to the driving thesis behind this ETF and the investments that you're making. What is it at this point, and has it shifted from the time when Microsoft was talking about, augmented reality headsets, which they're disinvesting in right now?
Has the theme changed? No. Has the thesis changed? No. I think if there's one area in which I've been surprised, it has been the relative lack of metaverse-oriented companies having an IPO over the last few years. We've certainly seen a number of different companies targeting that opportunity, whether that's ARM or Unity, Snapchat a little bit farther back, as well as Roblox in early 2021. In that regard, I would tell you that the composition overall is less concentrated than I expected. But even when you talk about names like NVIDIA, you'll find that throughout 2021, 2022, less recently, Jensen Huang was the single largest proponent of this economic opportunity, consistently telling on CNBC, no doubt, that close to half of the world economy would eventually consist in the metaverse. More recently, he uses Omniverse, their own trademarked platform, perhaps to drive distance from the term, but that thesis remains as central to what they're doing as it is at Microsoft, even as they pull back from headsets.